The S&P 500 is down 0.75% today, which is quite significant because now that the news is over about the interest rate hikes, we're going to be starting to see the end of the reactionary movements in the market because of it. So where do I think it's going to be going after this? Well, it's actually quite difficult to predict because there's a lot of factors going in here. First of all, I think that we're going to be starting to see inflation fall faster than before because now we have 375-point hikes in a row. I believe that it's going to turbocharge inflation back down to sustainable levels. However, we're going to have to be quite patient to see that fall down because this typically takes a long time. It is not a quick process. Another thing I'd like to point out is that the VIX, the volatility index, is very, very high right now. As a matter of fact, it's 31.8 as of right now, which is extremely high, and it's above the typical sustainable level. As a matter of fact, I'm going to show you guys a longer term chart on the VIX. So in March of 2022, it had jumped to as high as 36, but very, very shortly after, it started falling down quickly to as low as 18.5. Where do I think it's going next after right now, where we're at 31.7? I believe that it's going to fall back to as low as 28. What does this mean for the S&P 500? Well, it would mean that we're going to see it bounce back up. I don't think it's going to be a significant bounce up because there is still a lot of bad news in the market. However, the fear, the surprise, the anguish, that aspect of the market is going to start to cool off pretty quickly because there's no more surprises left. The next interest rate hike is in November, which means that we have quite a bit of time, and September is coming to an end, which, as you guys probably well know, September just happens to be the worst month in the stock market on average for a very long time. And it has a psychological effect on people. So as soon as September is over, we might be starting to see several factors coming in to raise the market back up above 370 at the least, possibly even 375. So before I move on to the next topic, I'd like to ask you guys to like and subscribe. As you see, subscribing actually helps you guys more than it helps me because it allows you to continue learning about the stock market on a daily basis, where you'll continue learning how to make profits in any market condition from myself. And this is where liking the video comes in. Because when you like this video, you're allowing it to reach a larger audience, which I'm going to be very grateful for and will continue making videos for your own benefit. So make sure that you like and subscribe. And let's move on to look at the Great Britain pounds compared to the US dollar. It is 107 right now, which is absolutely insane considering it was almost 140 last year. So what does this mean, guys? It means that the US dollar is losing value slower than the Great Britain pound. Now, this is quite counterintuitive because you would think that when the pound is falling, the US dollar is gaining. But they're actually both losing. But since the Great Britain pound is losing faster than the US dollar, it's starting to show here. So let me show you guys a little illustration. So as the value of all these different currencies are falling, well, this is the average. But the Great Britain pound, we're going to mark it in blue, it's falling faster than the other ones. So what does this mean? It means that the spread between the two, that is the difference, and that is why the US dollar is gaining compared to the Great Britain pound, because it is falling slower than it is. As the Great Britain pound is falling, the US dollar is rising. And that is why we're seeing all these articles about the US dollar being the strongest it's been in many, many years, because Great Britain pound is just doing so terribly in comparison. So now it is 3:48, so we're in the last several minutes of the day in the market. The S&P 500 is actually starting to gain a little bit again. We might even see it down only 0.5% by the end of the day. And surprisingly, the NASDAQ ETF, which is more volatile normally, is only down 0.08%. So it's actually starting to show signs of wanting to come up. And this is quite counterintuitive because, as I said, the NASDAQ is more volatile. In a 5-day period, they fell more than the S&P 500 did because of its volatile nature in the technology sector. So this is what's surprising about it. And I think that it's a good sign. The market is starting to react a little more intelligently to the news that happened, and that these interest rate hikes might not be the worst news that has ever happened to us. In the next few weeks, I actually do expect to see the market start climbing back up, Not significantly, but enough to show that the market is not killed and enough that we're going to be okay in the longer term. And I think that the stock prices are going to start showing that this is not the end of the world and that interest rate hikes are actually helping our economy become more sustainable over the long term. Because that's what they are. It's not bad news, believe it or not. I think that this is a time of resustainability for the markets, putting it back where it's supposed to be so we can have another decade of excellent growth. That's my opinion about the stock market today on Monday, September 26th. Have a great day, guys, and good luck in the markets.